All right. Well, good afternoon, everyone. Welcome to our Stock Investing for Beginners webcast. Appreciate you taking some time out of your schedule to be here with me. Big shout out to Eva and Scott, Luck, and Simone, and Rojo, and 56 El Toro. Bienvenido. Scott, Luck, and everybody else that's here. I want to give a shout out to Barb, who's in the chat today. If you have some questions about our presentation, go ahead and post them in the chat, and Barb will handle those. Follow me and Barb on x.com at Scott Thompson CS or at Barb Armstrong CS. And also, just before the class started, I posted some scripts in the chat there, so you can scroll up to the top of the chat and you can see those. We'll be using some of those today. Our goal today is to use the tools that we introduced last week to scan for some new buy signals and to do a market posture analysis. We'll also take a look at our open positions and see what management needs to be done there. But before we start, let's go ahead and jump into our important information. Remind everybody the presentation today is for educational purposes only, not a recommendation of any particular strategy or stock that we look at today. We will be using some stops, and remember that there's no guarantee of an execution of a stop order to be at or near the stop price. We are using the paper money platform. There's some significant differences between the paper money and the live money transaction. We'll just briefly mention our Schwab stock slices. That's a partial share investing type of feature that's on schwab.com. That's not intended to be investment advice or recommendation of any of those partial share stocks that we look at. And there are some significant and specific risks attached to the fractional shares, so be aware of that before you invest in the fractional shares. And as always, investing involves risk, including the loss of principal. Let's go ahead and jump in and take a look at our Thinkorswim platform. Just give you a quick update. We are every single day. I go in and I buy a little portion or a partial share of an ETF that tracks the S&P 500 and the NASDAQ. We've been doing that since the 9th of June of 2024. That's been pretty fun and exciting. This little section here, the partial shares, is equivalent to if you were doing Schwab stock slices on the schwab.com channel or website. And what we're doing is we're just investing $5 per stock per week in the top 10 holdings of the ETFs that track those two major indices. And you can kind of see we almost have a full share of NVIDIA. Most of these are just partial shares. Again, we're just investing about $5 a day. And if I click here on the P&L open, you can kind of see the dates. So 6/9, and I'm just going to scroll down to the bottom. So I did this yesterday because Monday was a holiday, but going in there, and it's just like I'm simulating what would take place if you were using the Schwab stock slices. You can go back and see some episodes where we went in more detail of how to use that. But that's another great way for somebody to get started investing when they don't have a lot of money. This Stock Investing for Beginner webcast is meant to be designed to help that new investor some ideas to kind of get started. And then the other one that we do is a little bit more active is we refer to this as our 2 green arrow plan. Let me show you our investor playlist of all of these series of lessons. We go through a series of 8 lessons probably every quarter or so. But those lessons will be here in the Stock Investing Basics on our homepage. And it's just lesson 1, 2, 3, 4, 5, 6, 7, and 8. And, the first 4 lessons are kind of laying a foundation for what you need to be a good investor. And then lesson 5 is kind of what to buy, looking for fundamentally sound stocks. And then 6 is the technical signals. 7 is like how much to purchase. And then, lesson 8 is kind of managing the portfolio. So those are the different lesson topics. And again, you can go back and watch those at your convenience. So I wanted to show you that. But in lesson number 4 over here, we talk about the plan or the investing plan that we're using called 2 green arrows. And so I want to just review our open positions first here. And I'll summarize the plan. Basically, we're looking for uptrending stocks that are in the S&P 100. So we're taking advantage of the S&P 100, kind of making some fundamental assumptions that stocks in the S&P 100, which are the biggest 100 companies in the U.S. market, that they're going to be fundamentally sound. Now, that may or may not be the case, depending on how you define fundamentally sound, but that's the watch list that we're using. So we don't have to do an in-depth fundamental analysis. If you want to get some more details on fundamental analysis, James Boyd does a great webcast on Wednesdays at 11 a.m. Eastern time called Growth and Value Stocks, and he does a deeper dive into the fundamentals in that webcast. But so what we're looking again for is uptrending stocks. We're using a 50-period moving average and a MACD histogram, and a MACD is a fancy name for a momentum indicator. Just kind of shows where the momentum's going up and down and up and down. And what we've done is we've combined those into a study set called two green arrows, and the two green arrows is the buy signal. And these stocks here that are listed are stocks that we've been purchasing really since the 9th of June when we started this webcast. And you can kind of see the different gains or losses that we have on some of this. We've been stopped out of some. In fact, we got stopped out of 3M and WFC yesterday with the big market drop. And then, the market's recovered a little bit today. But first off, again, I wanted to go through these about 14 open positions just real quickly. And you'll find that this process of analyzing whether we have anything to do is pretty easy once you have a very set plan. So what I've done is I've created a watch list of our open positions over here. And so I'm just going to go over here to the chart. And if you see this little red one, I'm going to link up my chart here where it's a red one. And then I can just scroll through these very quickly. So here's AMD. And when we do this, it's really very simple to process. If the stock's above the moving average, we really don't have anything to do. If the MACD's green, we consider that a valid buy signal, but there's probably not a whole lot to do. What we're looking for really is a red arrow signal, like two red arrows like this. If it closes below the moving average and the MACD's red, which is generally going to be the case, then we might have a stop adjustment to make. The other adjustment that we might make is this two green arrow, like when the MACD and the moving average are green, like actually they are today. When we get new green arrows on something that we've owned for a while, we could use that as a signal to move our stop up. If you wanted to do that, you can do that. So AMD, you can see we have a fairly new green arrow about 3, 4, 5 days ago, but this is very common. This is really an important part of managing this particular plan, the two green arrow plan with a 50-day moving average, which we see in green, and the MACD histogram down here. But it's really important to understand the purpose of this plan is to try to buy an uptrending stock and give that thing the benefit of the doubt on the trend for as long as we can almost stand it. Okay, this is a good example of this. When we bought this stock or added to the stock position over here when it was trading at about $176, it went sideways for a little bit. You can see it dipped below the moving average, then gapped up here, ran way up to 267, and everybody wishes that we sold it up there and then just rebought it down here, but that's not the plan. The plan is to wait for the two red arrows, and then if and when that happens, we set the stop 3% below the low price that day. And so that bounced around a little bit, and we've really kind of kept that same stop order all through this choppiness here. And this is what's challenging about trading the trend, is just allowing that stock to either stay sideways and then go back up, which is now happening, and we're happy to still be in it, or let it go sideways and then break down and stop us out. Okay, so AMD right now, and as you look through this, and we're spending a little time on this one just because it's the first one, but we're going to fly through these here in just a minute. So, I'm looking at the right side of the chart. Let me get rid of my, I'm just going to have just my cursor up here. And, I'm looking here at the right side, and all I'm really looking for is the stock above or below the moving average? Is the MACD red or green? And, in this case, if it's not a fairly new green arrow or it's been trading sideways like this, I don't have anything to do. Okay. So on AMD, yep, we can see we have two green arrows. Stock just broke some resistance, but until that trend resumes, I'm not going to be moving the stop up on this in our example plan. Next one, Citibank. Citibank was trending sideways up here. We look at the right side of the chart. We have a red arrow on the MACD, but the stock's above the moving average, so that's a green arrow. Guess what? We're done with our analysis. That's all it takes. 3, 4, 5 seconds. You can look at that. Maybe even faster than that. We're done. We don't have anything to do here on Citigroup. Cisco. Now, Cisco gave two red arrows here, dropped down, and we moved the stop. And I actually don't know why we didn't get stopped out over here, but we didn't. Got really close again here. but our stop on this one is at 72.95. Today's low was 73.01. So again, we missed the stop by pennies. And this one, hopefully it does something like AMD did. But here we have our stop, and we're just going to let that happen. If the market goes down again tomorrow, this is going to get stopped out most likely, and that's okay. But we don't have anything new to do on Cisco. CVS. Now CVS is in the healthcare group. This one looks like we bought some or added to the position over here. It's been really sideways. Looks like it tried to break out today. But again, because the support level hasn't really changed, most traders, when they're looking at this type of plan, will wait for that trend to resume. Maybe this is what they'll generally look for. Okay, we got a breakout or a close above resistance. We'll look for it to go up, make a high somewhere here, probably come back. And what we'd like to see happen is it test this old resistance as new support. And then the moving average will start to rise, and hopefully the stock starts to make those higher highs and higher lows again, and then we can resume moving that stop up. But as of today, we do have a red arrow and a green arrow up here, but the support hasn't really changed yet. So most traders at this point would just leave their stop where it is and then try to let the trend resume. Ford was kind of interesting. We saw this consolidation pattern here. We set a conditional order to buy it if it traded above that. It did that morning, shot up like a rocket, which was really fun to be in there at the end of the day. And then it's basically given all that back. And so we had 2 red arrows yesterday, and the question would be as well, should we have moved our stop? Well, let's go through the mechanics or the math, right? This day, the rule says to put the stop 3% below the low price that day, which is 13.23. So if I take my calculator and I go 13.23 times 0.97, and that gives me a stop of 12.83. And so I would look at my existing stop here, and the stop is at 13.09. So our original stop is at 13.09. The rule says to put the stop at, what was it, 12.83? And so we wouldn't want to lower that initial stop because our initial risk is often based on that first stop. And so we don't want to lower our stop. In this case, even though there were 2 red arrows, we're just going to let that original stop, do its job, which for the most part, especially when we first get started, is to keep our hands in our pockets and don't be too anxious to adjust things. Now, of course, today the market, the stocks recovered a little bit, still below that resistance point, still losing money on it, but we're going to let that stop do its job. So again, really nothing new to do here. Gilead. Gilead, this one was one of the went sideways for a long time. We have a stop down here. Finally, the thing broke out again. And so what do you notice here on Gilead? Gilead, number one, has 2 green arrows on it. The moving average is rising slightly, and this is making a new all-time high, kind of breaking through these resistance levels, whether that's, diagonal. Some people would draw resistance kind of like this on the diagonal, and they could say, well, that's a breakout, that's a valid buy signal. Or they might say, well, the old high was up in here, and that's a resistance breakout as well. So this one has a valid 2 green arrow buy signal on it. We already own this one, so we could add to the position if we wanted to. Some people feel very uncomfortable adding when it's at an all-time high. But guess what? There might be a new high tomorrow, right? And back, as the stock trends up, it makes new highs fairly frequently. So, but anyway, as per our rules, because of the sideways notion or motion that we've had here, even though we have 2 green arrows, again, I don't really want to move the stop on this until we have new higher support levels being established. All right. So just a few more to go through on this, and then we're going to do a top-down analysis and look for some new buy signals. Johnson & Johnson's been trending up very nicely. We've bought this and added to it. This one has 2 green arrows on it. We got a new 2 green arrow signal back here on the 13th. So at that time, we could have moved our stop up to 1% below the moving average, which is kind of our rule. If it's above the moving average, when we get that buy signal, which is really the only time we see a buy signal, is if that we could put the stop 1% below the moving average. Let's see where that would be right now. So if we go back to this day, the moving average, if you look right up here at the top, but on that particular day, on the 13th, the moving average value was 202.63. So I'll let you guys that have been here a little while calculate where could we put our stop based on the rule on a new buy signal on Johnson & Johnson. So 202.63 times what? So let's go through that together. 202.63. If we wanted to adjust the stop on this because the trend is going up and because we just got that new buy signal, we could multiply that by 0.99, and that would give us a stop at $200.60. And so our current stop, which is here, our current stop, if I move my cursor there, is at 193.75, and we could move it up right there. We could move that up again. Take a look at the calculator. The calculator said we could go $200.60. And so the question is do we want to move that up? And most people would probably say, yeah. So let's go ahead and do that. How do we do that? Well, it's pretty easy on Thinkorswim. I can just left click on hold this little button, and I can drag it up there, and you can see the price moving. It's there to the left. You see it's at $199.79, $200.69. And so I'm just going to let go there. Oops. Not sure what happened there, but let's see if it'll go up. It's $200. Okay, I'm going to have to manually do it. So let's go over here to the monitor tab. Here's Johnson & Johnson. We have our little sell order. Left click on that, right click to cancel replace. And we just put our new price in here. So we're reducing our risk now on this trade by about $7 or so. Okay, $200.60. Make sure it's still good till canceled. Oh, I know what's happening. I had a condition on there. So the reason it's not accepting the orders, I had this condition, and it was for a month ago. So we're going to take that off and click save. That's why it wouldn't let me move it before. So hit confirm and send, and then we just review it. So we moved our stop to $200.60. It's a stop order, so there's no guarantee we're going to get filled at that price. So it's going to get triggered at that price and could be filled significantly lower. And we send that order off. And now I have my stop up here. Okay, that's Johnson & Johnson. MS, okay, red arrow over here. We had a green arrow a couple days ago. If we wanted to, again, we could move the stop up. That looks like it's pretty close, so I'm not going to play with that one there. MU, this one gave 2 green arrows 3 days ago. Looks like the moving average there, this is quite far off the moving average, which makes it a little bit challenging sometimes. But the moving average was at 266.08. If we take our calculator, go 266.08 times 0.99, we could move our stop to 263.41. So 263.41, whoa, that's quite a bit higher than where it is at 244. So let's move this one up to, there's 65. We'll just let it go, and then we're going to edit it. So click edit. 263.41 was it? Good till canceled, confirm and send. And just again, it's a stop order, no guarantee to get filled there. It's in the right group. We send that off, and now we've adjusted our stop. So again, people ask all the time, in this process, how do we try to protect our profit? How do we move our stop up? This is the method. The big overarching question is, when do we sell? Well, we sell when the trend is over. When's the trend over? Well, based on this rule set, that trend isn't over until it breaks the moving average and then essentially goes down another 3% below the low of that broken day and keeps going. That's how we sell in this study set. And what happens by using kind of that bigger rule and being willing to maybe risk, holy cow, 394-ish down to 260. I mean, there's a lot of risk there, right? As far as per share, relatively speaking. But I mean, that's how you start getting into some of the percentage returns when the stock's doing really well over time. So, that may not be comfortable for everybody, and you could scale out. We've talked about that in this webcast too. But the rule is to put the stop and keep the stop below the moving average, trying to let that trend develop as much as you can. All right. Couple more. NVIDIA. Ugh. NVIDIA's just been trading sideways. Our stop's down here kind of below the support level that we had. We haven't been moving this one very aggressively. This has just been chopping up and down and sideways. I don't think our support really has changed from here. And so this one, I'm just going to leave the stop where it is, but this has not been performing very well. We're losing money on our position there. Oxy is one that we got in on a breakout over here. That one, we set the initial stop below the moving average, hoping that this old resistance would become the new support, which hasn't happened. They are giving a new green arrow buy signal today. The moving average is rising and it closed above resistance. So technically, I think this is another valid entry point where it is right here. It's just still kind of sideways. So I think you want to be extra patient with this type of stock. Okay. RTX is one that's been trending nicely for us. Gave a green arrow buy signal about a week and a half ago. As of right this second, those of you that like to go to Barb's class, you'll recognize this pattern. What's that pattern called? Stock goes up about 5, 6, 7 days, pullbacks for a couple days. We've got a doji candle and a bullish harami perhaps, but that's a short-term bull flag setup right there on RTX. Doesn't mean it'll keep going up, but hopefully it does. But really, this is a valid buy signal on RTX. We could add to this position if we wanted to, or we could wait for that bounce entry. Last one is Walmart. And Walmart, we've been in this one for quite a while. It broke out above the 109.50 area, came back and kind of tested that area, gave a new buy signal about a week or so ago with that moving average rising and the MACD rising, or sorry, the MACD green arrow and the green arrow above the moving average. And so this one's a valid buy signal right now as well. It's a little late for what we try to do in our webcast. We try to get in closer to the green arrow day or when it bounces off support. So, but that's a review. There just wasn't a lot to do with our open positions. And that's how this 2 green arrow plan works. It's not something that requires a lot of time. It's just a matter of going through and being consistent. All right. And so now let's go on to the next step, which was to use the tools that we taught last week to go through a market posture review, determine which sectors are outperforming the S&P 500, and then run a scan that I had to update. I'll talk about that in a second. But let's go to our charts, and I have posted this LTIT trend 3 charts. I've posted this there in the chat. You're welcome to grab that. If you scroll up to the top, you'll see the listing, and it's also in the description right now. But this is what I call our market posture 3-grid chart, or our long-term, intermediate-term, and short-term trend. Posture is just another way to describe the trend. So I'm going to go ahead and right-click and maximize this cell. And we're just going to do a quick review of the SPX. What are the trends for these different terms? Partly because the market pulled back pretty hard yesterday. It was down like 2%. Barb did a great job on her webcast yesterday talking about, one down day doesn't necessarily change the trend, right? So we want to be aware of that, but let's just go through this quickly. Okay, the long-term moving averages. We have a 10-period exponential moving average and a 40-period exponential moving average on a weekly chart. So that's a 10-week moving average and a 40-week moving average. And if you do the math, that's very similar to a 50-day and a 200-day moving average. I learned it on a weekly chart using the 10 and 40. Some people use a 50 and 200 on a daily chart, and that's fine. So, but what's our posture? Just one quick question. Is the 10 above the 40 or below the 40? So what's this? 10's above the 40, we're long-term bullish. All right. Okay, let's go on to the next chart. We're going to click the right arrow over here. And now we're looking at a 10-period exponential moving average and a 30-period simple moving average on a daily chart. And here's kind of the rules for this. Let me move this over. The rules are basically, if the 30-period moving average is rising, we're going to say we're intermediate bullish. If the 30-period moving average is falling, we're going to say we're intermediate bearish. And if the 30-period moving average is kind of flat or oscillating back and forth, we're going to say we're neutral. So if we zoom in here a little bit, if I put my cursor today, let me get rid of my lines. where is the moving average? Let me shrink this down real quick over here so we can see it. But look up here at the top, you'll see the simple moving average in red, and the moving average value today is at 68.8286. Yesterday it was at 68.8269. So technically it's still rising, but we had a little dip there yesterday, right? And you guys can see that. I'm going to say this is starting to oscillate back and forth. It's not really down yet. So I'm not going to say we're intermediate bearish, but I think we've definitely changed from intermediate bullish to intermediate neutral. All right. So let's go over here, intermediate neutral. And then let's look at the short term. Okay. How about the short term? Now, this is a really cool chart. This one has the Williams fractal candles in it. And again, this link is there in the chat. It's also in the description. But what this does is it does a good job, pretty good job of identifying your short-term highs and lows in the trend. And so, we define an uptrend as short-term highs and higher lows. A downtrend is short-term lower lows and lower highs. And then any break in that pattern. So if we see like a, let's just compare a couple here. We have on, let me get rid of my, so here we have a high, that red candle red arrow represents a high. We came down and made a green arrow, and that was obviously a higher low and a higher high compared to the last time. So at that point, we could argue our short-term trend is bullish. Okay. Here's the other really cool thing about this. Let me zoom backwards just real quick. I love this when I first learned it. So at this point, like right here, when I have my previous high, I know what has to happen right now, today, for this trend to continue. Anything different than that, this trend is starting to change, right? So if this is my last high, I know right here on the 5th of January that my next high, if the trend is going to stay up in the short term, my next high has to be higher than 69.4577, right? So if we move the chart forward a couple days, like right there, that high is at 69.48. So we just made a new high. So as of this day, that trend is continuing. We've made a new high. Now we'd love to see it make a much higher high, but it might not, right? Next day, intraday, we make a higher high up there, but we don't see what's going on. We still have the intraday higher high, and then it pulls back a day, right? So some people might argue, well, that looks kind of similar, but in my opinion, that intraday higher high happened, and so we're good to go. Okay, here we are again. We have some highs and lows, but right there, like this is the 14th of, so what's today? Today's the 21st. So like this was last time we met, in fact. The stock market, the SPX made a little bit, in my opinion, a similar or at least a lower low in the trend. And so we had a higher high, but followed by a lower low. That starts to change the trend a little bit. We got a little bit of a heads up saying, hey, Scott, the market trend, something's going on here. We're not making those higher highs and higher lows, at least in the short term. Intermediate term, we still are. Okay. Next day, kind of gapped up, chopping around. And now we're down here. Okay. And let's zoom out where we are. We don't have our little arrows in here yet, but we can see visually, right, that this low that we had yesterday is certainly lower than the last few lows that we've had. And okay, now this is kind of my personal definition, and the fractal here doesn't quite do this, so this is like an addition to the tool, is if we close above the high of this hammer candle pattern, that's the name of this one, if we close above that high, which was at 69.41, and we gapped up and then sold off. A red candle means we closed down near the low that day. That was at 69.44.47 and 69.41. So technically that's a close above the high of the low day. And so for me, if we start closing below these lows like we did yesterday, then I would draw my own little arrow here. I'll just kind of do it in this yellow color. I would say that we got a lower high and a lower low. And guess what? A lower high and lower low is. In the short term, that's a downtrend. Okay. So that's one way that you can do this market posture. This is getting really granular, especially when it comes down to the short term. And so we're making lower lows and lower highs here in the short term. All right. So that's our market posture review. I don't see any questions coming up here. I see a lot of commentary. Looks like you guys are chatting between yourselves, which is great. But if you do have some questions, go ahead and chat those in, and Barb and I will try to handle those. But now what I want to do is take the next tool that we talked about last week, is that's that sector comparison. And so I showed you this last week. There's a pre-built list already. If you go over here to public, you can go to S&P sector indices right here and pull that list up. I recreated that list and added the SPX to it here. And then, and this script is also available in the chat, I added this 3-month change. Now let me show you how to get that. So once you import that script into your Thinkorswim, if you click on customize, it's going to be right here. 3-month percent change. And so I just selected that one and moved it over. And so what this does is it takes a look at the last 3 months on each individual sector and gives you a percentage return. Okay. So I'm going to pop this off the page so we can see it a little bit better. All right. And so what I did is I sorted by the percent change. And this concept is part of top-down analysis. The top-down analysis starts with looking at your market posture. Then we look to identify what 3 sectors are outperforming the S&P 500, or what 3 sectors are the top. And so if I sort by this, like here's a sort just by the numbers, right? So, you know, there it goes. So this is just them in order. But if I want to sort by that 3-month, I click on that and then click again, and now I have from high to low. But we can still see it's the same sectors that we had last week: energy, materials, and healthcare, that are outperforming. Okay, so I'm going to put those over here. We had energy, then we had materials, and then we had healthcare. And so step 3 then here in the top-down analysis is just say, well, we've identified the outperforming sectors. Let's go find some stocks in those sectors and see if they have a buy signal. And I yesterday, or not yesterday, but last week, I introduced you to a scan. Now I've got this one in black, partly to compare. I know some of you can't see the black very well, but I've tried to make the font size as big as you can see it here. And so if you import this search, okay, here's the criteria here. Let me, leave it there a second, and I'm going to scroll it over because my font's too big to get it all on one screen. Okay. But just quick review. We're looking for the stock to be trading between like $200, $20 and $300. We're looking for a minimum volume of 500,000 shares per day. We're looking for something that's above the moving average. And we're looking for, this is the little tweak I made. Last week we has a value. The MACD value was, the lines were greater than 0. The problem with that is the lines, the way the MACD is done, the lines could be above 0, but actually still could be kind of a red arrow. So what I did is I changed it to difference. The difference between the fast length and the short length being positive or greater than 0, that means that's a green arrow. So that's a little tweak I made. That link or that search is now there, available in the description. If you're watching the recording, or if you're here live, you can just scroll up to the top and you can grab it there. So, but here's the cool part is we've got our 2 green arrow search. So like if you click on this drop-down menu and you've saved it, it'll be in your personal batch and it'll say 2 green search in sector. That's the name we gave it. Okay. So that part, let me clear this off here. Is we identified the sector, right? Industry, energy, and then we're just going to select all energy stocks. And here's kind of the cool part. We didn't do this last week. I'm adding it to here. But intersect with what watch list or what list of public stocks are we looking to trade in for the most part? Well, S&P 100, right? So I can actually choose that here, go to public, down to S through W, S&P 100. And so I can scan for energy stocks that are in the S&P 100. And if I click scan, I get two, CVX and XOM. These stocks have two green arrows and are in the energy sector, which is outperforming the S&P 500. And we could go look at those stocks real quick. Okay. Let's take a quick peek over there at those stocks. And let me go back, and now I'm going to put in my two green arrow study set here. So if I go CVX, I mean, we can see it's a green arrow. The moving average is green, but that's a pretty old signal. We're looking for stuff more like down here, like when it's bouncing off support. That's what we're looking for. But CVX technically has a buy signal. XOM, same thing. Green arrow happened way back on the bounce. That's when we're trying to buy these. And if you had done this search every day for the last 10 days, you would have found it on that day. But we're a little bit late to the dance here, so maybe we pass on the energy stocks. Let's go back to our search. Okay, what was the other sector that's outperforming? We had energy. What was the other one? You guys remember? So energy, then we had materials. So select all materials. And again, same search criteria. Just go in here, scan. And there's no matching symbols in the S&P 100. So what can we do here? Well, I could say, well, I want to expand this. What about the S&P 500 or the NASDAQ, right? So I could go over here and just go S&P 500 to give me a little bit more material out there to choose from, pun intended, and scan again. Let's see if anything comes up here today. When I ran it earlier, there were definitely some stocks, but it looks like it's going to get hung up here today. So let's go over to healthcare. Healthcare, select all healthcare, S&P 100. Scan that one. And the S&P 100, we have four that showed up: GILD, J&J, MDT, and PFE. So let's take a look here. And then I see the Kong Milia asking a question. Let me finish this and I'll answer that in a second. So let's take a look. GILD, J&J, MDT. I don't want to look at all of these, but these are stocks that you could go see if they have a valid buy signal on them. We own J&J already. So if we wanted to, we could maybe add to that position. Let's take a quick look at that one. J&J. So J&J is actually pulled back a little bit. They had their earnings today, it looks like, before the market opened. And so, this one, some people would wait for that, bounce. So we don't have the bounce yet. If you buy the stock today when it's falling like this, you might be kind of doing what we call catching a falling knife. But it did gap down and then rally. So it actually closed way up here. But this one has a valid buy signal on it. GILD is another one that we own already. We talked about that one earlier. It kind of broke out of different areas there. Now, just for time, I know the materials search didn't yield any results. Let me try it one more time here, and we'll try it on the S&P 500 and see if it'll scan for us. There it goes. So I looked at several of these here, and I found a couple, Dow, that probably everybody's familiar with, and Lyondell Basel Industry. I don't know what this one is, but these two, Dow and LYB, let's go take a quick look at those because those are some material stocks that are bouncing off support. DOW. So DOW, you can see, was trading sideways through here, gapped up, pulled back to this little flag, and we're looking for a close above the high of this candle yesterday for a valid bounce entry today, and we have that. So I'm going to go ahead and place an order on this one here as per our rules, and then try to answer that question there. All right. So when we're buying this, we generally just put a limit order at the close. So we're going to go in there at 28.41. We set our stop 1% below the moving average, which is at 23.90. So let's see where our stop's going to go. 3 times 0.99. So 23.66 is where our stop's going to be. So DOW stop 2366, entry 28.41. And then what we've been doing in this webcast is we're pretending that we are trading about a $10,000 portfolio, and we're investing up to 5%. So, this stock's at 28.41. So if we can invest up to $500, we would just take our $500 divided by 28.41, and we could go in there with about 17 shares. Okay. And so how do we place that order? Well, I can do it a couple different ways. I can go right here and just put my cursor about at that purchase price, right click, buy custom with stop, and then that'll create an order here for me, and I have all my notes and I can just fill it in. So we said 17 shares. And then if I lock that link up, it'll give 17 here. We said 28.41 on our purchase price. That was just the closing price. That's a limit order. And then we set our stop 1% below the moving average is at 23.66. And that's good till canceled. And we'll make those both good till canceled since the market's closed right now. And the last thing that I like to check here is the distance between our entry and our stop. What you guys see what that is? Let's take a look here. This is another position sizing technique that some people like to double check with. We did our $500 investment and we'd be okay with that. But there's another criteria that we've talked about is that's not risking more than $50, which is like 0.5% of your total portfolio. And so if we take our 28.41 minus 23.66, we're risking about $4.75 per share. So if I really didn't want to risk more than about $50, like if I got in today and stopped out tomorrow, and I want that loss to be no more than 50, this is how you would do that. You take $50 divided by the risk per share, which is 475 we just calculated. And then we would go with 10 shares instead of the 17. Does that make sense? So we're going in there with 10 shares instead of 17. I'm going to go ahead and do that, 10 shares instead of 17, because if the market just tanks tomorrow and we get stopped out, we said at the beginning, $50 was kind of the maximum loss. Okay, and so we hit confirm and send, review the order. We have our entry price. We double check that. We have our stop. We double check that. We realize it's a stop order, no guaranteed we're going to get filled there. And let's put that in our 2 green arrow plan. We send that order off. All right, so that's going to be a working order for tomorrow. And if the market opens up there about the same spot, it'll follow or go down. All right, so there were a couple questions. One of them was, how do we determine if we're late to the dance? Well, the easiest way, I think it was Kong that asked that. When you're looking at the stocks and it's above the moving average and the moving average is rising, usually that green arrow on the MACD is the day that we're trying to buy. So if we go back to like that, let's go back to J&J. J&J, the buy signal day was basically here. And so, are we a little bit late? Yes. But here's the other check that you want to do. If we bought it on that day, the closing price was like at 213.65. We actually can get in there, not too far above that, up there at 217. But that's kind of how I can say that I'm late. If we look at CVX, that's the one we looked at. That breakout and bounce was way back over here, several weeks ago. And so, most people kind of have trouble when they buy near highs and the stock just goes down 4 or 5 or 6 days in a row. That's kind of a tough place to be as a new investor. So, a lot of times new investors and traders in general like to buy when the momentum's starting to go up, and they like that bounce with the green arrows. So hopefully that answers your question. Jay Richardson brought up a good point. Dow has earnings coming up. Dow has earnings coming up in a few days. Some people wait for after earnings. Nothing wrong with that. All right. Let's see. Do we wait for a pullback or a hold to get in? Yeah, that's essentially what we did on Dow. And then a few weeks ago in this webcast, we talked about setting up orders. Like if we see that little bull flag like that, Conditional order traders, Barb does a lot of these in her webcast, is she'll put a conditional order that says, hey, if this starts to trade above that high, get me into the trade. And that's a conditional order. But this is what I wanted to do today, is to go through our market posture review, identify those sectors that are outperforming again, do an example trade. We reviewed our open positions. Hopefully this was helpful for you. For homework, go back and run some scans, see what stocks meet your criteria, maybe refine your entry rules a little bit and your exit rules, and have a great day, everybody. Thank you for being here today. We'll see you.